Recently, Circle's price has dropped from its peak to below $70. Many people are asking whether it is time to buy the dip, whether Circle is cheap enough now, or whether it will fall further. Circle has already entered my watch list, so I will make two videos to explain the stablecoin industry and Circle's investment logic clearly. In today's video, we will start with the stablecoin industry itself. Because if you do not know what a stablecoin is, where its value comes from, and how big its future growth potential is, you cannot judge what Circle should be worth. In the next video, we will talk only about Circle. We will break down its business model, growth logic, valuation, and whether the current price is truly an opportunity. So let's start with the basic question. What is a stablecoin and why is it so important? A stablecoin is a type of cryptocurrency. It works on a blockchain, just like Bitcoin and Ethereum. It has the same blockchain features, such as being impossible to counterfeit, easy to track, and impossible to duplicate freely. But it is completely different from Bitcoin, which can rise or fall sharply in one day. The biggest feature of stablecoin is its stable price. It is designed to be pegged to fiat currency in the real world. This means one stablecoin is equal to $1. To keep the price stable at $1, the company that issues stablecoins must hold real-world assets as backing. These assets are usually cash or very safe short-term U.S. Treasury bills. You can think of it this way. Behind every stablecoin on the blockchain, there is one real dollar stored as support. This is the opposite of Bitcoin. Bitcoin's value is fully determined by the market. It has no asset reserves behind it. It is a purely algorithm-driven asset. Stablecoins are more like moving the digital dollars from a bank account onto the blockchain and using the blockchain to store and transfer dollars. For example, Circle, the company we will talk about in the next video, issues a stablecoin. When you give Circle $1, they create one stablecoin on the blockchain for you, which is USDC. After you receive USDC, you can send it freely across most blockchains. You can use it for payments, trading, or cross-border transfers. Circle will store the real dollar you gave them as the backing for the USDC they issued to you. So why have stablecoins become such a hot topic in recent years? The answer is simple. Their ceiling is extremely high. On one hand, stablecoins inherit the advantages of blockchain, such as being secure, traceable, tamper-proof, low-cost, fast, and available 24 hours a day. On the other hand, they avoid the huge price swings seen in Bitcoin. Bitcoin is too volatile, so people prefer to hold it as an asset instead of using it for payments. Stablecoins are different. Their greatest feature is stability, which makes them perfect for transactions and payments. In theory, stablecoins are cheaper and faster than dollars, and more stable and more useful than Bitcoin in real transactions. This is why so many companies, institutions, and even governments are paying attention to this field. But for us as investors, what really matters is not the concept itself, but its real value in the real world. Only when we understand the real use cases of stablecoins can we judge their investment potential. When we talk about stablecoin use cases, many people may think of gray area transactions or people in high inflation countries using them to protect their wealth. These scenarios do exist, but they are not the main point. From investors' perspective, the single most important use case of stablecoins is cross-border payments. Its business value, its future growth potential, and whether it is worth investing in all come from this use case. To understand why cross-border payments are the core application, we need to look at how inefficient the current cross-border payment system is. If you send money from Australia overseas, the fee is usually $30 to $50. If you send a less common currency, the fee could be 5% to 7% of the transfer amount. A cross-border transfer usually takes 3 to 5 days to arrive. Some routes even take more than a week. This means cross-border payments are slow and expensive. For many small businesses, the cost is too high to bear. Stablecoins completely change this. Because they use the blockchain, a global infrastructure, they're not limited by countries or banking systems. Cross-border transfers do not need intermediary banks, do not need clearing, and do not need to wait for business days. The cost of stablecoin transfer is usually only a few cents, and it arrives almost instantly. This speed and low cost are something traditional cross-border payment systems cannot match. More importantly, stablecoins do not replace the existing cross-border payment market. They create a huge new market. In the past, many small businesses, freelancers, and overseas teams could not join global trade because fees were too high and transfers were too slow. Stablecoins give them, for the first time, the ability to enter the global market. They can receive payments from anyone in the world at almost no cost. This is why stablecoins are an irreversible trend. Once a technology that is faster, cheaper, and more open appears, it will not go backwards. Just like we cannot go from mobile payments back to cash payments. So how big is the cross-border payment market? Some estimates show that in 2024, the total amount of cross-border payments reached almost $200 trillion. Stablecoins account for less than 1% of that. This means the growth potential of stablecoins in cross-border payments is not just huge, it is extremely huge. But for stablecoins to truly achieve global adoption, three conditions must be met. Only when all three are in place can stablecoins enter a mature stage and become part of the mainstream payment system. The first condition is trust. For any currency to be used, people must trust it. Users must believe the stablecoin is fully backed by real dollars. Governments must believe it is compliant and transparent. Banks and financial institutions must believe it will not introduce extra risks. Stablecoin issuers never lack money or technology. What they lack is trust. If people do not want to use your coin, your business cannot grow. So how is trust built? The answer is regulation. Over the past 2 years, following the introduction of the U.S. Genius Act, countries around the world have accelerated the development of regulatory frameworks for stablecoins. The EU released MiCA. Singapore and Hong Kong implemented licensing regimes. This marks a turning point for the entire industry. It shows regulation is officially entering the space, and the industry is shifting from uncontrolled growth to regulated operations. Of course, these laws still need time to take full effect. For example, the U.S. bill has passed the Senate but is still waiting for the House vote. But no matter what, the industry has already taken a major step in the right direction. With regulation and government-level support, stablecoins can finally earn the trust of the public. The second condition is user experience. Even though blockchain has existed for more than 10 years, most people have never used a wallet and do not know what a private key is. Creating a wallet, storing seed phrases, and managing chains are all too complicated for ordinary users. If stablecoins want mass adoption, users must not feel the blockchain. It must be as simple as mobile payments today. The industry has been working toward this. PayPal and Stripe now integrate USDC directly. Coinbase launched a smart wallet that no longer needs seed phrases. Circle built programmable wallets that hide all technical steps in the background. The entire industry is moving toward an invisible user experience. In the future, people will not feel they're using blockchain. They will just feel that payments are faster, cheaper, and smoother. The third condition is the industry ecosystem. For stablecoins to truly scale, it is not enough that users want them, and it is not enough that the experience is good. The entire cross-border payment ecosystem must be reshaped. Cross-border payments involve deeply entrenched interests. Visa, MasterCard, SWIFT, and banks are all existing beneficiaries. If the ecosystem remains unchanged, stablecoins will always stay on the sidelines. To gain a real position, stablecoins need an industry-level transformation, even a reshuffling of power. Only when roles are redistributed can stablecoins earn a true seat at the table. In the past few years, we have already seen this turning point begin. Financial institutions that once resisted stablecoins are now embracing them. Visa uses USDC for on-chain settlement. MasterCard supports on-chain wallet payments. Stripe and PayPal are testing stablecoin payments. JP Morgan's JP Morgan coin already settles over $1 billions on-chain every day. These giants have realized that stablecoins are not a trend they can stop. They are a direction everyone must join. If you cannot beat it, you join it. However, even though this trend has started, the industry reshuffle is not complete. Traditional systems and blockchain systems have not yet formed a fully integrated global network. We are still in the early stages of the transformation. When the reshuffle reaches its final stage, when traditional institutions, stablecoin issuers, and regulatory frameworks fully integrate, that is when stablecoins will truly explode. That is when they can reach global mass adoption and enter mainstream payments. In my view, stablecoins are an irreversible technology trend. They will become the underlying infrastructure of the next generation of global payments. Technology does not stop because of human resistance or temporary difficulty. And I believe all the challenges we mentioned will eventually be solved. As investors, our job is to capture this disruptive opportunity. At this point, you might ask, if I'm bullish on stablecoins, who can I invest in? The truth is, there are very few stablecoin-related companies regular investors can buy. Circle is one of the most important and the purest among them. So in the next video, I will share my full analysis of Circle, including its business model, growth logic, risks, reasonable valuation, and whether the current price is an opportunity or a trap. If you want to see that video as soon as it comes out, make sure to subscribe. I will see you in the next one.